This is where we're going to analyze transactions involving the purchase of similar companies in our industry, the acquisition of similar companies. Okay, we're going to talk about this a little bit later. The upper left section of this worksheet where I am right now, really nicely formatted, something that we'd put in front of a client. We're going to do all our work kind of down below to the right. And there are several different transactions that we're going to look at. We'll come back to this one, but I did just want to introduce it. Next tab, Craft DCF example. All right, this is going to be, I'm going to do an example discounted cash flow model in class in 2 weeks in our next session. Okay, we'll be doing that here. I'm going to do a DCF model for Craft, get a value for Craft, and then for homework, you're going to work on these DCF homework tabs a little farther out to the right. That's homework for class 3. It's in the future, not tonight. Okay. Weighted average cost of capital, or the WACC tab. This is where we're going to calculate the discount rate for our DCF model. Very, very in-depth analysis all takes place on this tab. We're going to review that in the next class as well. DCF homework instructions. This is your homework instructions for your DCF after next class, and then you'll be working in that last model. All right, so again, really typical valuation template that you'd use in banking. Obviously, there wouldn't be homework instructions in banking, but you would have your comparable companies, precedent transactions, and DCF, typically all within one Excel file. All right, well, what I'm going to do for this example, the spreading example, I'm going back to the Comp Spread tab, and I'm going to go back in and spread some of the data for Heinz. Your file has all the complete information. All right? The goal here for you is to just watch and follow along, make sure I don't make any mistakes. All right? But by the end of this example, my data should match yours. I just kind of want to show you the methodology for getting to that completed data set. And then once we've done that, your homework is going to be to do the same thing for General Mills, same thing for Kellogg. All right, you've got all the information you need to do that. I'll show you where all that resides in your electronic course materials. All right, does that make sense? All right, so this Comp Spread tab, at the very top, these top two rows, we've got some global assumptions. We're assuming that each company has a federal tax rate of 35%, effective tax rate, which is equal to the federal rate. Right. These companies were all being valued as of December 19th, 2008. So that valuation date is very important. That's the date on which we pull the stock prices for each of these companies and formulate the value. Okay, last fiscal year end, that is FYE -1, was 2006. Current fiscal year end, or the most recent data that's available to us, was fiscal 2007. Next fiscal year end, 2008 projected. 2 years out, 2009 projected. Right? Anytime you see a date with a P after it, means projected or pro forma. Sometimes you'll see an A after a date. That usually stands for actual. Sometimes you'll see an H for historical. All right? But typically that's how people will distinguish between historical data and future data. All right, next thing we're going to do is capture for each of our comps, each of our comparable companies that we've identified, what is their ticker symbol? What is their name? What is their description? What is their stock price? And what were their 52-week high and low stock prices as well? You'll notice that all these data are blue. These are all data that we've hard-coded into our model. All right, so we've typed in the ticker symbols, the names, the descriptions, entered in the stock price data. All right, then down in row 14, you've got some numbers that are now black. All right, these are output. These are formulas that are being calculated. Again, the rule is if you're inputting something and it's coming up black, you should stop. All right, those are formulas that are basically pre-populated into your template. You don't want to override those. All right, but blue, you can enter. You're supposed to be entering in data directly. All right, so for each company, we're calculating where are they trading relative to their high. That's what that formula is calculating there in each of those cells. All right, cells 16 and 17, we're calculating enterprise value and equity value. Right? Equity value is another way of saying market value of equity. Calculating those items for each company. You'll see that these are also black. They are linked down to cells that reside far below in our model. All right, so we wouldn't want to touch these either. Even for General Mills and Kellogg, you look at those numbers are currently 0 in yours. These will update as you put more data into the template. Don't touch the cells that are black. Okay, then we've got our multiples. Several different multiples. Enterprise value to revenues, enterprise value to LTM revenues, next year revenues, 2 years out. Same thing for enterprise value to EBITDA multiples, enterprise value to EBIT multiples. Okay, the one thing I will point out has to do not with the numbers themselves, but with the formula that you see. And if you look up into the formula line, it is that F sub X line, you see a big, ugly if statement. Equals if, is error, etc. Who knows what an if statement is?
It's creating a command that if certain numbers are this, then you input, in your case, you selected to them to input NA not applicable. Whereas you could input anything. You could tell them if the numbers are below 60, put NA.
Yep. Exactly. An if statement basically allows us to have some conditional logic in our model. And we can tell Excel if there are certain circumstances that exist, then do one thing. Otherwise, do something else. And that's exactly what we've done here. What we've done here, we've only really done it for formatting purposes. Right? It might look like a big, complicated if statement, but really what this is geared at is making sure there are no error signs or error messages in our model. It's for formatting. Sometimes you'll see error messages. You'll see pound ref. You'll see div 0. You'll see pound NA. You'll see pound value. You'll see all kinds of crazy looking error messages. And what we're doing is trying to avoid having those big ugly messages in there. So to interpret this if statement, what this statement is saying is if we divide F16 by F105, right, basically enterprise value divided by sales, and that gives us an error, then instead of returning an error message, put the letters NA into that cell as the result. Otherwise, and then we have another if statement, if we divide enterprise value divided by revenues and it gives us a result that's less than 0, okay, instead of putting NA, I want to put NM, not meaningful, because a negative revenue multiple really isn't meaningful to us. Right? Otherwise, give us the result, F16 divided by F105. It's a nested if statement. There's an if statement inside of an if statement. But again, this is only for formatting purposes. We're going to teach you how to do if statements in one of the later sessions. All right? But if you see them in here, that's really how you interpret them. If one set of circumstances is true, do this. Otherwise, do that. That's basically how they're used. All right, so I believe that logic is in all the multiples. Then we're calculating some margins for each company. In other words, how profitable are they? And then if we had other metrics, we might add that in to row 47, or we could insert some rows and add some other things in as the circumstances might dictate. If something else were important that we wanted to measure, we'd put it there. All right. Cell 51, here's now we get down to entering in some financial data, some data about the company. You'll see that these numbers are in blue, right? Again, blue means hard code. This is where I need to start inputting data into my model. All right, so what I'm going to do is basically populate my model with all the numbers that I need from Heinz to get those multiples. And again, your job here is really just to follow along, make sure you understand what I'm doing, so that you can do the same thing for homework. All right, so basic shares outstanding. Again, where do I find basic shares outstanding? Front page, and it's the front page of the most recent SEC filing. Okay, if our 10K is the most recent, then we get it off the front page of the most recent 10K. If we have a 10Q, then that's where we get it as well. We get it off the front page of the most recent 10Q, which I'm going to do in the case of Heinz. All right, so basic shares outstanding, again, front page of the most recent filing, in this case, the 10Q. One word of caution, sometimes in the electronic versions of these files, that basic share count will bleed over onto the next page when these get PDF'd. All right, so sometimes it might not be on the very first page, sometimes it might bleed over to page 2, sometimes to page 3. But in the case of Heinz, I'm going to enter 314.439706. All right, everybody see that on their 10Q? And just like with the homework, you enter every digit that's available, you just move the decimal place accordingly. All right. Cash and cash equivalents. All right, now the model's asking for balance sheet data from the most recent filing, which again is the 10Q in this case. All right, so for cash and cash equivalents, I'll enter 927.656. Next item I need is total debt. This is actually a situation where I need to add a few different lines together. Remember yesterday when I put up the balance sheet on the board, I said that sometimes you can see, some of our debt might be in the current portion or in the current section of the liabilities, current liabilities. Sometimes it's in long term. That's certainly the case here. The case of Heinz, and I'll pull up the 10Q, put it on the board just so everybody can see. In the case of Heinz on the balance sheet, you see that they've actually got 3 different types of debt that need to be included in our total debt figure. They have short-term debt, okay, probably borrowings under a revolving line of credit. They have current portion of long-term debt. Right? In this case, it's called portion of long-term debt due within a year, but that's the same thing, just a different way of saying it. And then, of course, we have long-term debt. All right, so in my valuation template, what I want to do is add those 3 figures together. So in cell F54, I'm going to say equals 1446.979 plus 3.141 plus 4283.115. Just entering in those exact numbers that were in the 10Q, just moving the decimal point 3 places to the left. All right, now, because I have added 3 numbers together in a cell, right, and because nobody could actually go and pick up this balance sheet and see the number 5733.2 anywhere here, I'm going to actually leave a comment in the cell that tells the reader how I got to that number. They can basically follow my work. I'm kind of like footnoting my work here. All right, so that includes 3 different numbers: short-term debt, current portion of long-term debt, and long-term debt. All right. Way you can leave a comment, you can right-click. Actually, right-click on any cell that doesn't already have a comment and say Insert Comment. And if there is a comment, you can edit it as well. Or you can mouse over it, and it'll tell you what that comment is. All right? Just leaving an audit trail. Okay, next item, convertible debt figured in fully diluted shares. You see that that is a 0. It's black, so it is linked to something else in the model. In this case, it's linked down to cell F172. All right, for now, we need to leave it alone. All right, what this is, and I'm going to do an example of this in a minute for you. What this is to the extent the company had convertible debt, and to the extent that we treated it as being converted, we need to back it out of our debt. Remember, we can only have it as one or the other. If it had been included in our debt, but we converted it, we would back it out so we don't double count it. Now it's equity, it's no longer debt. It can only be one or the other. That's down below when we do our dilution. I'll show you, I'm going to do an example of that in a moment. In the case of Heinz, they don't have convertible preferred, they don't have convertible debt. I'll pretend as though they do just for an example purpose. All right, so we leave that alone. Preferred equity, in the case of Heinz, is 0. So we just hard code a 0. All right, convertible preferred, same thing as our convertible debt. We're going to leave that alone. It's black. And then minority interest, 0. They don't have any minority interest. If they did have minority interest, it would typically show up right between the liabilities and the equity section of the balance sheet. Right. Remember, we talked about it being sort of a liability. It would show up at the bottom of the liabilities section. Okay, all of these items that we've just captured, you should probably recognize some of these. A lot of these are going to be part of that total enterprise value calculation. All those items on the right side of the balance sheet, basically how has the company financed their assets? What's the value to all providers of capital? That's what we're starting to try and answer here. Right, next item, we need current debt. Basically, in this case, all we're looking for is those pieces of debt that reside in the current liabilities section. In this case, it's just those two items we saw before, equals 1446.979 plus 3.141. And again, because I'm adding two numbers together, I leave a comment to tell someone where I got those numbers. Total current liabilities will come right off the balance sheet, 3445.837. Total current assets right off the balance sheet as well. I'm flipping over to page 4 on my hard copy balance sheet. 3848.958. Okay, once we have both of those, it basically allows us to calculate net working capital. It's one of those ratios, one of those figures that we talked about yesterday. Then the last two items we need here, we need shareholders' equity, basically the book value of the company. Total shareholders' equity, 14,544.001. And then total assets, 10,397.049. All right. Everybody see where I'm getting these numbers and how I'm going about doing this? All right. Just want to make sure that everyone follows that. Okay, so we've captured all the information we need from our balance sheet. Now we need to move on to the income statement. Okay, so this next section, I need to capture income statement data from my current 10Q. So I'm going to turn back to my income statement. Remember, in this case, I have two income statements in this 10Q. One is for the last 3 months, one is for the last 6 months. Which one do I want? Last 6. I want all the year-to-date data, not just the last 3 months. So I'm on page 3 of the hard copy 10Q. That's 6-month ended income statement. And for sales, my number is 5195.749. Cost of goods sold, 3340.898. You see that gross profit is automatically calculating for us. Okay, it is in black, we leave it alone. Right? All we need to enter, sales and cost of goods sold, gross profit will calculate automatically. All right? Same thing for your homework. So you see those numbers out to the right, you'll leave those alone. SG&A is 1076.238. EBIT also calculates for us as well to be 778.6 million, which matches operating income 778.6 million on the income statement. All right. So as you're doing these and these items, these subtotals are calculating, make sure they're right. Okay, check your work, make sure they tie back to the numbers in your income statement. And it's good to check as you go. Don't wait until the end, because then you're not going to know exactly where you made a mistake. So do it as you go. Reported net income, 505.674. Next item, depreciation, amortization. Where would I find that? Always on the cash flow. Right? Sometimes you might see it broken out on the income statement. In this case, we do not. Means it's lumped into probably SG&A and probably into cost of goods sold. The total numbers, as always, will be presented on the cash flow. And in this case, on page 6 of the hard copy 10Q, we see that they're presented in 2 line items. Depreciation of 126.3 plus amortization of 19.43 million. Okay, and again, just like before, because I'm adding 2 numbers together, because someone can't go and find 145.7, I'm going to leave a comment just telling them how I got there. And then finally, non-recurring items. non-recurring operating expenses, these are those items that we need to normalize for. Okay, if the company has, like we said before, maybe unusual disaster, natural disaster charges, maybe they won a lawsuit, maybe they had some severance, this is where we'd account for it, provided that those items were originally in SG&A. Okay, provided that they were operating expenses. Okay, where would I find those if they existed? MD&A, right? This is why we read the MD&A. It would tell us, to the extent they had them, how much they were, whether they were abnormal expenses or income items, and we would account for them accordingly. Remember, unusual expenses mean that EBIT was too low, so we'd add back unusual expenses. Unusual income means that EBIT was overstated, so we'd deduct it back out. In the case of Heinz, non-recurring items, they actually had 0, so we'll hard code that. And then they didn't have any non-recurring items that were non-operating in nature. Right? Maybe if they did, it might be things like an accounting change, might be a non-operating item that would occur below the line. It would occur below the EBIT level. All right, so that one's 0 as well. The last item we need to capture is capital expenditures, often referred to as CapEx. Where would I find this? Cash flow, right? Remember we put that up on the board yesterday. It's usually the first line item in the cash from investing section, and it's usually listed in it's always listed in the cash flow statement as a use of cash, a negative. Here we're going to enter it just as an absolute value, and the only reason we're doing it here, it's going to calculate as a percentage of sales how much is the company spending in CapEx. And we use it to capture that ratio. So I'll enter 124.218 as a positive here. All right, so I just spread the most recent year-to-date period. The next thing you would do is spread last year's year-to-date. So in each of these items in the 10Q, you'd spread the column next to what I just captured. Okay, so in the income statement on page 3, the income statement for 10/31/2007. And all those numbers should match. And I'm not going to redo that because you just saw me do the other. I am going to spread one of the years for the 10K. All right, just so we can take a look at these financials as well. And in the 10K,